Today's Thursday, February 1st, and this is a chart review on a position I'm currently holding involving the micro 10-year yield futures. Ticker symbol is /10Y, and as of the time of this recording, the spot price is quoted at $3.87. And since the futures market started trading earlier this evening at 6 p.m. Eastern, the yield is up almost 3 cents. So this is a chart layout at the daily time frame. So each of these candlesticks represents a day's worth of trading. And just doing a 30-day look back, I've identified two local support and resistance levels identified or marked up by these horizontal blue lines. And relative to the current spot price, this is the current candlestick right here. So what I'll do is I'll switch down to a lower time frame. This way, just putting things into my perspective. So this is the 10-year yield at the 1 hour time frame. So now instead of each candlestick being a day's worth of trading, each candlestick is an hour's worth of trading. And so far, it appears that price is trying to retest 389, the local support resistance level. So during this time period, this downtrend, it appears that the current market structure is inside this descending channel. And the upper yellow is acting as another layer of resistance. The bottom yellow is acting as another layer of support. This dotted line is acting as both support and resistance. And that's very evident here as price has been ranging inside this channel. Price for this time period was respecting the dotted line until it switched from the upper half to the lower half of this channel. So I'm anticipating that as price is slowly creeping up, it might actually break above the dotted, well, these two resistance levels. First, the blue horizontal and the dotted diagonal. So if price does break above these two strong resistance levels, then it is possible that price may come up and contend with and breaking above this upper yellow resistance level. So what I did was a few minutes ago, if I can pin it back, I took a long position. I only went long with one futures, considering that the general trend is to the downside. And because I went long, meaning I'm bullish, I'm essentially counter trading the market or betting against the market because again, the general trend is to the downside. So this is my entry price, 387. And if I open up Active Trader, this is the entry price and the number of futures, which is what I marked up on the chart, as well as my entry price being identified by the two yellow arrowheads on either side of price, as well as it being the zero line on this P&L scale. And we can see here that for every tick up or down, it's a profit or loss of $1 per futures. So if I went long with the second futures, then the profit and loss would reflect a $2 move per tick up or down. So worst case scenario, my assessment is wrong. If or when price crosses below $3.84, 3.845, I'm gonna place an order here to close out the position, capping my loss to $30. So I'm not going to babysit this trade this entire time. I think once I place that stop order, at that point the trade will be in autopilot until I get closed out, or I'll reevaluate it if or when price breaks above, let's say 396. So ideally that would be at the point where price is broken above this upper resistance level. So for the purpose of the time, I will pause it here, let the trade work itself out, and I'll pick it up in a few hours. So a quick status check. Today's Friday, February 2nd, and the stock market will be opening in a little over 30 minutes now. But within the past hour, volatility has returned. So much so that the spot price for the 10-year yield is now quoted at $3.99. And during the overnight session, it's up almost 15 cents. So right here, this is the current hour. So clearly it has broken above two resistance levels. The blue horizontal, which was at $3.89, as well as this uh, diagonal resistance or part of the descending channel. So if the next candlestick does stay above this channel, then from my perspective, this downtrend is over. This market structure is no longer valid for a potential continuation to the upside, retesting $4.14. Also, the other update is that I was able to go long a second futures at par value. So I am now holding two futures long. So here is my stop order sitting here as an insurance policy if price was going to drop. And if I open up Active Trader, the position is now up $224. And if I scroll down, my entry price is right here, which is the zero line at $3.87. And my stop was sitting at a $56 loss. What I'll do now is I will move my stop to maybe $10 above my entry price. This way I'm guaranteeing this as a profitable trade. In the worst case scenario, price spikes back to the downside. At that point, I'll be guaranteeing that this is a profitable trade. So that's the status. I will pause it here, let the trade continue working itself out, and hopefully that we'll see some continuation to the upside. Today's Thursday, February 22nd, and the stock market will be opening in a little over an hour from now. But a quick status check on the 10-year yield trade. As of the time of this recording, the spot price is quoted at $4.34. This is the current hour candlestick right here. So clearly, as price broke above this local support resistance level, I've walked my stop order to $4.19, which is appearing to be some sort of support and resistance as price was rejected at this price point. And then when price faded to the downside, it bounced off this area as well. So I moved my stop to this price level. So opening up Active Trader, as of the time of this recording, the trade is up $924. Ideally, I'd like to close this trade out if or when price breaks above or slightly above $4.46. So it's got a while to go, but it's almost halfway there. So $4.46. I don't know if I went through this already, but it's sitting here at $1,170 if I close out the position at this specific price point here. Now on the stop order side, it's just the insurance policy to protect it for any violent move to the downside. It's sitting at 4.188, and that's a $626 protection right here. So again, at least I'm guaranteeing this to be a risk-free trade at this point. So what I'll do is I'll pause it again, wait for a few more days, and hopefully at that point, price is above 446. So until the next update, more to follow. So I didn't think I was going to be doing another status check, but it is Friday, February 23rd. And so far this morning, the 10-year yield has been selling off. It's lost almost 7 cents at this point. And so what I did, I've walked my stop higher. It's sitting now at 4.226, which is a little above $700. So we can see now the P&L is reflecting a positive bounce of $774. It's already lost $126 since this drop off right here. So just to protect the capital that that the trade has pulled in so far, I moved my stop. It's sitting at 4.226, and that's take profit of $702. So just in case I do get closed out, this is the current status. I'll pause it again and I'll pick it up hopefully in a few more days, and price at that point is just reversing back to the upside. So I'll be back. Today's Monday, February 26th, and the stock market's been trading for a little over almost 15 minutes now. But taking a look at the 10-year yield shows that I am out of the trade. I was closed out when the futures market started trading Sunday evening. So this is the candlestick. So at the open, there was a sharp drop to the point that it was low enough to fill my limit order at 4.226. So right here is the confirmation bubble, acknowledging my liquidation at that point. And now price looks like it's going to bounce and try to run and retest $4.35. So if I open up active trader, I don't have a position. This is flat. It's been closed out since Sunday evening. I wasn't even aware of that. So yeah, so this was actually the longest trade I've held on a futures position. So this was almost a month, but I was able to capitalize on that break to the upside. So if I zoom out just a little bit, so my entry again was down here back on February 1st, and then I was able to capitalize on that breakout when price broke out of this descending channel. And yeah, so what I'll do is I'll provide details of the position, but this was still a profitable trade, a little over $700. So it's a good way to start the week. A bit disappointed because I think price or the yield is going to continue increasing. If price does come down a little bit, I may consider jumping back into another trade, but I'm going to continue researching other potential trade setups. So for the time being, I'll end it here, and until the next trade, I'll see you.